Who's that?
Sorry?
Who's that?
Just a old colleague.
Oh, right.
Yeah.
Okay, welcome everyone. In this session, we're discussing sanctions compliance in a real-time world. So payments are speeding up. There's nearly 60 domestic markets that now have real-time payment systems, and the cross-border space is rapidly catching up with that as well. Today, we're going to be talking about what that means for the customer, some of the ways that affects compliance, and think about, do we have the tools and techniques to actually be compliant in a real-time world? So I'm joined on this panel by Tony McLaughlin, Emerging Payments and Business Development at Citi, Matt Brown, Global Head of Compliance Screening at HSBC, and Nicholas Stuckens, Head of Sanctions Compliance Services at SWIFT. A bit of housekeeping before we kick off. We have 45 minutes for this session, so about 30 minutes of discussion and time for questions at the end. You all have the Slido app, Slido on your app. You can send through questions, and I'll try and feed them in as we go along as well, so feel free to do so. So we're going to start with the scene on payment trends. So Tony, if you'd like to talk a bit about why are payments becoming real time and some of the trends that we're seeing from that perspective.
Sure. Thank you very much. Nice to be here. So the whole of the banking infrastructure is kind of predicated on batch processing and store and forward messaging. We have end of day cut-off times. We go home at the weekends. But 21st century e-commerce is 24/7 interactive and real time. And so when we look at the landscape, you look at faster payments being developed, you look at RTGS systems talking about becoming 24/7. You have radical suggestions like central bank digital currencies and Libra. You have a wave of fintechs. Really what this is, it's this disconnect between the reality of the kind of semi-clockwork banking industry based upon batch processing and store and forward messaging, and where the 21st century businesses want us to be. So that gap is being filled progressively, where as banks upgrading our own systems to become more 24/7 and interactive, developing APIs, becoming a bit more modern. It's also happening in the market infrastructures domestically and also internationally. Lots of the discussion this week at Cybos about becoming real time. But it really highlights for us, the biggest challenge of banks and the biggest trend which is taking place. The biggest trend is not about blockchain or big data or machine intelligence. It's about the banking industry and the market infrastructures moving from batch processing, store and forward messaging into real-time interactive. And that's an investment that's going to cost our industry billions of dollars. And there will be certain crunch points. And one of the crunch points is, how do we do compliance in a real-time world?
And Matt, from a big bank's perspective, how ready or aware are compliance of the move to real-time payments?
Well, I think that typically compliance has been seen as the policeman, the bad guy, in trying to stop the business trying to move forward with things like innovative products. And I think they've always been a step behind product, channel, even the disruptors. What we recognize and have recognized now for a number of years is we have to be working as part of the solution rather than part of the problem. So certainly from my perspective is now about how do I work with the business, looking at a risk-based approach, not a standard approach to saying yes or saying no, but actually working with each channel, with each product, and thinking about how we can do it within regulation, within legal constraints, or more about how we can actually do the business rather than not do it.
And Nicola, what's the SWIFT perspective on this as well?
Yeah, maybe let me start by sharing a few figures to set the problem in perspective. So since we introduced GPI, we've been monitoring the speed of payments. And right now what we see is that 50% of the GPI transactions are credited within 30 minutes. Some are credited within seconds, and definitely 96% of transactions are credited within 24 hours. So clearly we see an acceleration in the payments. With GPI, we also introduced this unique transaction reference, so we can now see a transaction view as opposed to individual message view. That means we can also now have statistics on the number of actors, and we call them agents, that are involved in a transaction end-to-end. So we see that 80% of the transactions on the network involve 2 or 3 banks, but some do involve 5 or 6 banks. So on average, we see 2.8. So say 3 banks on average are screening or are involved into a transaction. That means that this payment is going to be screened outbound from the first bank, inbound, outbound, inbound again. So that's four times screening the same payment. And it's very likely that when there is an alert at the first gate, it is going to be triggered again at the second gate, third gate, and fourth gate. And so the same questions, the same investigations, the same alerts are going to be reviewed multiple times. And that is delaying, of course, the payment at every step. So it clearly is not efficient the way it is, and it's not going to support the experience that we need for faster payment.
And Matt, do you see this as a challenge for compliance?
Yeah, it's a very big challenge. I think back to, when I first started in the compliance arena, a transaction, as we said previously, that would move between, various correspondents across border. The great thing from a compliance perspective is you didn't really ever know where it was, so you could always deny knowledge of having it, and you could take your time investigating it. And what we now know, and things like GPI, instant payments, and trying to achieve that frictionless payment is putting a lot of pressure on compliance departments to make key decisions, important decisions, decisions that have a regulatory impact if they're undertaken in the wrong environment. It's making them put under pressure to make those quickly. Mm-hmm. And that, there's been various sessions today about the need for speed and Top Gun and all of those good things. We're always going to make the right decision. We're always going to take, if it's important for us to make that decision and take our time making that decision, then we will do. But actually the environment's changing, and the pressure to make that decision at speed is more apparent than it's ever been.
Is that what we've also been hearing from the SWIFT community, Nicola?
Yes, that's very consistent indeed. I mean, the community at large is saying there's immense pressure on cost, but also increasingly there is now, as you said, immense pressure to reconsider how we are going to tackle the problem of these payments. If we look at the characteristics of these real-time payments, typically these payments are meant to be instantaneous. So that means that the funds must be available on the beneficiary web account within minutes, or ideally within seconds. But from a compliance perspective, if you want to raise an alert and take the time to review this alert, that's quite incompatible with the speed that is expected from these systems. These payments, they also need to be, or these payment systems, they're expected to be 24/7. And today, most of the banks, with a few exceptions of global banks, are not organized around 24/7 operations. So if you raise an alert, most of the banks do not have people to review this alert overnight and to be able to take decisions. So there's a limited number of players who can actually sustain that 24/7 operations for them. These payments are also expected to provide certainty. So at the moment you want to initiate the payment, you actually get certainty that it's going to be credited end-to-end. So that also calls for a change, because today most payments are screened at the point of settlement, not at the point of initiation. So again, that's where we need to reconsider a little bit the approach. And there is also this notion of irrevocability. So in instant payment schemes, once the funds have been credited, you cannot recall them. So clearly, again, that means that screening needs to happen before settlement, needs to happen at the point of initiation. So clearly, different approach to the problem is required. So it's not really about just technology, but reconsider beyond technology also the processes.
So many many issues to be overcome. So how do we actually go about balancing some of those opposing forces of, sanctions and real-time payments? Matt, why have utilities become such a topic of interest in recent months?
So I think that if we reflect back on where the industry is, and again, the previous session I was just in was talking about, various stages where organisations are in terms of their technical compliance. But actually, what are we trying to achieve here? It isn't about being compliant. It isn't actually about ticking a box. It's actually about trying to fight financial crime. And there's so much more to do in that space in terms of identifying and hopefully preventing financial crime. And what I think we find now is that a lot of organisations are at a place where they are technically compliant. They are now on a journey to try and identify within their infrastructure greater financial crime, but they also want to reduce their costs and be more efficient. And I think that the opportunity that's in front of us now is about actually, if we work together to show the whole picture rather than one piece of the jigsaw, then actually the evidence of that financial crime will become clearer. There are various cases. 1MDB is one that springs to mind, where had we seen the whole picture earlier, then perhaps that scandal would have been not necessarily prevented, but it would have been identified earlier. And I think that there's an opportunity for us to work together, pool our resources, our data, our technology, and it's not just about necessarily the banks that perhaps have greater resources, have more dollars, but actually creating something that's for the good of the industry rather than just one individual bank. And that, for me, I don't really want to be here, in Cybos in Amsterdam in 2022, still without a utility. Let's do this once. Let's do it really, really well. And let's not do it in 3 or 4 organisations with the same lists, with the same system, with the same standards. Let's just do it once, but do it really well.
And there's been some great examples of cooperation already, such as Gimlet here in the UK, or the Dutch banks coming together for that AML utility as well. But what's the Wolfsburg perspective on this particular topic?
Yeah, so some of you will be familiar with the Wolfsburg Group. 13 banks, 13 of the largest banks have been working together now for 20 years, actually, this year. And we've started to talk to SWIFT about creating a payment screening utility. And we're in discussions around that. So exactly what I was talking about. So let's actually come together, try and screen a transaction once, do it to a common standard with a common system, align our risk appetites, which is, we know, very challenging, and try and do this so that we get the benefit from a risk identification perspective. The client experience is far better. It's actually aligned with frictionless and instant payments, and we don't have that kind of 3 or 4 banks in a chain doing exactly the same thing, probably to varying degrees of quality.
And Nicola, SWIFT, have already invested in utilities such as the KYC registry. Why do utilities make sense in this instance as well?
Yeah, so when we spoke about utility at SWIFT, indeed the KYC registry comes to mind. But 7 years ago we launched a screening service, and it's now used by over 1,000 banks in 150 countries, and effectively that became a utility service as well. It's a utility that is really targeted at banks that cannot leverage that want to leverage shared technology, that do not have the resources and the skills maybe to operate these types of systems, or because just economically it doesn't make any sense for them to invest into leading edge technology and maintaining it, because it's quite costly and complex. But effectively it's still a utility model where every bank has an operation environment that is available for themselves. I think, Matt, you're running a utility for your own organization, but I think increasingly it makes sense to start considering whether these utilities should start breaking the silos between banks, and whether actually, because the process have matured across the industry, whether screening becomes a bit of a commodity, and that really leads himself to a utility model. So I think that there's clearly opportunities that we can consider in a utility model where that banks cannot do when they operate systems in isolation. And so what Matt was saying about looking at across the network, looking at patterns, looking at how we can actually apply machine learning, how we can build a feedback loop between the end result of the screening and actually improving the detection capabilities and really come to a point where we take screening to the next level, because most of these systems today are really imprecise. They generate massive amount of false positives. 99% of these false positive, of these alerts end up being false positive, which is creating a lot of frustration. And there's a limit to what you can achieve with just a screening engine. So you need to consider a more global approach to the problem.
And utilities are just one approach that we might take, but what about digital identities and how might they help with the move to real time as well?
Yeah, I think that's part of the context in which a transaction takes place. And you know, the countries that are making most progress in terms of the digitization of payments are India, which is based upon the Aadhaar digital ID, you know, Sweden, Norway, Denmark, based upon bank ID. You know, it's worth reflecting on, you know, payments in an environment like the United States, which is in the cards business, it's 25% of cards volume, but 50% of fraud. And all this kind of comes down to ID. In fact, you can say that payments really represents digital ID or ID plus accounting entries. And if you get the ID correct, then the downstream accounting entries should be less problematic. So I think one of the parts of the solution and ensuring that we have good compliance in a fully interactive 24/7 digital world is to have a good base layer of digital ID. Aadhaar means foundation in Hindi, and it's really the foundation for that India stack of payment systems. So one very simple thing that we would recommend is that countries and indeed supranational groups like the EU, if we want to have secure payments, let's build that on the basis of ID. And there's, in fact, a very good candidate for issuing those IDs are the banks. So federated ID is something that we really promote.
And those IDs would be fed into any transaction, but pre-validated in a way to say that person is not on any kind of list or things.
Well, indeed, I mean, a digital ID issued by a bank based upon its due diligence is evidence that it's gone through a KYC and you know, and other enhanced due diligence processes. So it will add to the security of the entire system if we have these IDs at the base layer of the system.
Great.
Two remarks on digital ID. I think indeed, if we look at SWIFT data today, when we take snapshots of the payments, we look at the quality of the data in transactions. It's quite shocking. You know, there are a number of fields where you can use structured ID, and in fact, what we see is that a lot of banks still use free text data, and where there are sometimes, you know, there's a BIC, which is a unique ID for a bank, for an identifier, and still there's a number of banks that are using free text data. So clearly, there's something to leverage there that is not correctly leveraged today. But I think the concept of digital ID could be taken to the next level. I mean, if you look at the airline industry, there is a process of passenger screening now. But if your name is on, you know, if your name is close to a name on the list, you can apply for a redress number, which is a kind of way to saying you're not the person on the list, and you could still book a ticket. So I think that's a concept that needs to be explored further. You could have a concept of trusted participants, which indeed would be screened, and you know, people that would apply, or entities, corporations that would apply for an LEI or a unique ID that could be screened overnight. So I think, you know, the concept of payment screening and name screening needs to be bridged to some extent, so you can leverage the best of breed of these two approaches.
Absolutely.
We just had a question I'd like to feed in. So, is the lack of communication between the regulators and banks causing the gap today? And also, do you think that regulators would come around to supporting a screening utility?
Shall I have a go at that? I don't think there's a gap in communication. I think the initiative needs to be taken by the organisation to understand and work out how their risk appetite aligns with the regulatory approach in that particular jurisdiction. The challenge when you're a global player is multiple jurisdictions, but that's an exciting challenge. So I don't think there's a gap there. There is an interpretation, and that's why we have dialogue backwards and forwards with the regulator to align and to say, this is what we think you mean. Please tell us if we're wrong. But in terms of a utility, so most people in the room, I might even do an impromptu show of hands in a moment, but I think most people in the room would think that a regulator would be worried about a screening utility. So let's do that. Let's have a bit of audience participation. So those people in the room who think that the regulator would be concerned, regulators in the room don't need to vote. But those who think they would be concerned about a screening utility, please raise your hand. Okay, all right. So the majority of people think that they wouldn't be concerned. We have done some very tentative exploratory conversations with some of the regulators who attend the annual Wolfsburg Forum, which was in May of this year. And most of them are tentatively supportive. They understand why, from a financial crime risk perspective, we would want to try and bring together our resources. I think they're kind of thinking that we might have an efficiency play somewhere in there, but actually, when we talk about how we would pool our resources and our data and actually create not a utility for 13 banks, 20 banks, but for the 11,000 banks potentially that sit within the SWIFT network, actually they start to see the fact that this could actually be quite a game changer and actually would potentially raise the standards that we have across the world. So tentatively positive.
It's probably a risk-based approach, isn't it? It's a hybrid maybe of having utility services and also individual banks. Yeah. So it's probably not one or the other.
I think one of the other questions that always springs to mind when people think about outsourcing or utilities is, where does liability sit, and is there a liability shift from the banks to the utility provider? So does someone want to have a go at answering that one?
I think just as you cannot outsource your risk, you cannot outsource your liability. I think the liability will always sit with the banks. They are the first in line, they are the regulated entity. But I think if they want to leverage a utility model, they need to have clear controls, they need to have clear oversight, they need to have clear transparency on what this utility does for them and what standard it operates for them. And they need to be able to influence that standard and to govern it to their needs and risk appetite. So I think we see that some regulation is coming in Europe. There's the EBA guidelines about outsourcing, which are somewhat clarifying the landscape and saying what organizations can do within a certain context. So the question of liability, I think, is important, but it's not the primary focus. I think the focus is really about understanding the risk and understanding what this utility does for you.
And what about the question of sharing information? So today in the sanctions process, RFIs are quite heavy-duty processes and don't really help the process of real time because it takes time to exchange information and get back to people about requesting a date of birth, for example. In a utility model, would this change, or would it be beneficial, or how do you think that might differ to today's practices?
I think that what's interesting about when you start talking about a utility, we've had various conversations about the opportunities that come from that, and it's not just about the actual the filtering, let's say. You then start to think, okay, what about testing and assurance? How many people do we have looking at testing and assurance to different levels? Do we have different standards? Do we have different lists which we can align, and there's all kinds of things that spill over in terms of opportunities, and that things like RFI, and the disconnectivity, if that's a word, actually amongst our organisations on RFIs has been an industry issue for years, as long as I can remember, and actually you suddenly bring everybody together, then you actually would create something that actually dealt with the RFI, and there was an integral rationale for doing that as soon as possible within the actual utility. So that's just a kind of a byproduct of bringing together a utility, and I think there will be more and more and more as you can continue to think along those lines and other things that will spill over from that.
Actually, you could almost argue, do we need RFI at all? I mean, if a utility is really successful, if there is work done on the quality of the data, if the utility is better at it, then you wouldn't need to request that need for additional information amongst the banks. But I think that we've been talking about ISO 20022 for a number of years now. This is something that is coming. It's also one of the challenges where the industry needs to step up, because there's a risk that if the industry is just mapping their poorly formatted data into the new format, then we lose it all. And I think that's one of the clear benefits of ISO 20022 is really that richer data set, that structure could be leveraged for compliance reasons and to come to a level of precision that is way beyond what we've seen today with screening engine.
Can I make a point on the ISO 20022? I mean, I think if all we do is kind of migrate from empty messages into ISO 20022, then that's not really going to improve things. How we see it working is that there's going to be much more of an interactive interchange when it comes to SWIFT. There's probably going to be some APIs which are pre-transaction, API which are doing pre-validation, APIs for the transaction itself, and the transaction really should be kind of smooth because everything is done in the pre-validation phase. APIs for some form of orchestrated settlement, maybe like if and only if type of conditional settlement, and then APIs for post-transaction. So I don't think it's just going to be a question of replicating the existing almost fire and forget model that we have in the MT space into ISO 20022. Really what we should be looking at is designing an interactive transaction type rather than just sending off the message and see what happens.
Mm-hmm.
And going on from that point, so first of all, can we talk a bit about pre-validation and how that might help, and then move on to the pay later program as well? Yeah.
Sure. Yeah. So with pre-validation, I think the industry is increasingly looking at instant as an experience, and GPI is heading towards that. So that means that in order to be able to offer an instant experience, you need to, at the point of initiation, to be able to guarantee a number of things, including the fees, but also the timing of execution. And within that timing of execution, of course, comes compliance. So how can you get assurance at the point of initiation that a payment is not going to be delayed for compliance reasons? So is there a need to start producing a prediction of that screening outcome actually at the point of initiation, so that the banks can actually start guaranteeing that, yes, the payment will be credited within the expected time frame? The challenge with that is that today, the banks, the default position within the industry right now is that they would screen a payment at the point of initiation, but with current screening technology, you have like 3-5% hit rates. That's what the bank experience on average. Some are a lot higher, and depending on the nature of your market or the type of technology you're using. But that means that effectively you could deny access to screening, to instant payment to 3, 5, 10% of your customer, which is clearly not acceptable. So there is a need to get way better at it in terms of prediction, and pre-validation plays an important role in that respect.
And sorry, Tony, I've been reading too many of your LinkedIn posts. I didn't mean pay later. I meant
okay.
Request to pay.
Yeah, I mean, request to pay is a transaction type that is existing in some domestic schemes like UPI in India. And recently, the EBA clearing came out with a blueprint for a request to pay scheme, pan-European request to pay scheme. And the beautiful thing about that is that it's, the full payee information is in the request that goes to the payer's bank. And the more information you have, well, I know that you have to do the checking, but it's a better quality of information, better quality of checking. So that will be a useful transaction type for end customers, but it will also, I think, facilitate good screening of those types of transactions.
Because you'd have richer beneficiary data to begin with, or how might that be helpful?
Well, richer information about the whole context of the request, because if I'm sending you a request for payment, I have to identify myself and what the payment is for, and you. So in a sense, a request to pay transaction is kind of FATF compliant from the get-go.
Perfect. And what about the role of artificial intelligence? We hear a lot about it this week at Cybos, but how effective has it been at actually automating some of the screening process? And do you think it is enough or more to do on that front?
So, I mean, I can see that my head of analytics for HSBC at the back of the room starting to sweat now about the fact that I'm about to answer that question. So let me give you a kind of layman's answer or a non-technical answer. For me, this is quite a long journey. You know, some of us have just come from an AI forum, and for me, it's none of us are going to walk out of the conference today and get into a driverless car to take us home. People talk about the fact that, you know, some of children born today won't necessarily ever drive a car, you know, and you'll have your own view on that. For me, it's about tentative steps into, you know, robotics, which is kind of where a lot of organizations are at. You'd be surprised how much robotics is within your existing systems, whether it be repeat false positives or elements of machine learning. But actually, this kind of AI thing is a long way down the line for me. And actually starting to get people within the compliance department to accept that, you know, do they have a risk appetite for accepting the non-perfection within a system, given that we know today that human beings will make decisions that won't always be perfect, which we consider to be within our risk appetite. But when you set the system and you accept some risk with that, that then becomes difficult to accept at the outset. So there's as much a human being cultural angle to this as there is a technical nature. And I think it will take a number of iterations and a number of system changes before we'll ever get anywhere close to it. But I think it's potentially a game changer because of all of the things that we've spoken about today, instant payments, 24/7, we're going to need technology to be working in the background if we're going to have frictionless transactions, if we're going to actually, you know, revolutionize payments, you've got to revolutionize screening as well.
May I also make a point on that, which is, so we have deployed artificial intelligence on the front end of our business, which is the customer transaction initiation. We made an equity investment in a company called Feedzai, who are here, and used that to develop a platform called Citi Payment Outlier Detection, which is essentially looking at the pattern of a corporate customer or an FI customer's transaction initiation and identifying outliers. So that's we're experimenting with this technology. We've deployed it on that front end. So that's one thing, we're actually doing it and learning by doing it. And the second thing I would say, which is an argument for utilities, is there's the potential to apply utilities in white space areas. There are some things that you can only see in the middle. So I think the best place to see things like nested relationships and you know, interactions between entities that you can't see from an individual bank perspective is in the middle, and AI is going to be essential in finding those relationships.
Some dramatic weather for a dramatic
amazing
topic, I suppose. But AI, you know, is being experimented with, and you know, some banks are using it, some banks are not. But you can optimize your screening with AI per bank, but a transaction goes through multiple banks. So unless everybody has that same level of expertise and investment, it still isn't going to achieve the STP that it needs in real time unless everybody has that same approach as well. So in some ways, a utility can help with that because it will have more data to apply analytics on and also see that end-to-end process as well. Do you think that crypto and those initiatives are going to help with the compliance angle for real time, or what do you think the balance is there? Yeah,
look, I mean, the 21st century needs real-time payments, and there are different suggestions for delivering real-time payments. One is the upgrading of you know, bank-based systems, RTGS and SWIFT and so on and so forth. And the other suggestion is to have you know, cryptocurrencies. But there's one fundamental thing in the nature of cryptocurrencies which is little discussed, and it is they are fundamentally bearer instruments. And I'm not sure that the banking industry wants to revert to a world of bearer instruments. If you remember the movie Die Hard, the whole heist of Die Hard was Hans Gruber was after some bearer instruments which were locked in the safe. So bearer instruments are inherently unsafe from a compliance perspective. They're very attractive to criminals because of the nature, their semi-anonymous nature or their anonymous nature. So my view is this, moving to an instant payments world raises compliance issues if we do it on traditional rails. But it's much more dangerous if we do it on crypto rails based upon bearer instruments, and I don't think it's a good idea to go down that path.
Okay.
For me, it goes back to the very first question, which is crypto actually has some eminently traceable, great audit trail elements to it. For me, crypto is today and tomorrow. There'll be something else that comes along, and it's really about keeping up with that, understanding it, making sure we understand the underlying financial crime risk of that, whether or not it sits within our risk appetite or whether or not we're quite happy to let it go by the side. So I'm not so worried about crypto. I think there's elements which scare a lot of us, particularly the anonymity part of it. But I also think, that people who are looking to try and, move around some of our controls, we've got to get better at getting ahead of those guys, because if we shut down one area, they'll pop up in another one. So it's really about us trying to get ahead of that, understanding it within our risk appetite, and then trying to manage it.
Very balanced answer. Like it.
Well, I think crypto is to some extent is a technology, is a transport mechanism for asset transfer, and I think fundamentally it doesn't change the problem. FATF took a very clear position that the virtual asset providers will be bound by the same rules and obligations as the payment industry. So, they will need to step up to if any system based on crypto will need to abide by the same constraint as the regulated entities.
They will have alerts, they will have to deal with those alerts. How they deal with them, when they deal with them is perhaps the levers that they pull to make it real time. Yeah. Okay, we have just under 10 minutes left. Are there any more questions from the audience that we would like to either send through, or there might be a roaming mic as well if...
There's one there.
Is that, yeah, okay.
Hi, the payment filtering utility makes perfect sense. Do we think we'd need an established software vendor to build the tech for that, and would they want to do it given the potential threat to their revenue streams?
Yeah, let me have a stab at that. Well, you might want to open that up to some of the software developers in the room, but I think they would. I think that ultimately I don't see it as a barrier. Right now, the product that I use, if something goes wrong with that product, is it their fault or is it my fault? Well, it's going to be my fault, right? So I'm sure within the terms and conditions of the license that they're adequately covered. So it's really about how we take that in the utility, and clearly I think the benefit of doing that and creating a common standard which potentially could go the length and breadth of even beyond the SWIFT network, I might add. But let's start, with kind of maybe 103s, 202s, to be able to actually get somebody to come to the table with an industry standard that we could all point to and say that we like, and get our regulators to say, yeah, we like that, and to us all know that it would identify financial crime risk. I think it'd be a massive step forward. They wouldn't be liable for that. It's our liability. How you apportion liability within the utility, of course, is a particularly tricky situation, but it's actually something we've discussed with lawyers, external lawyers, internal lawyers, and we've said there's no barriers to doing this. It's difficult. It would require a lot of kind of sitting down and head scratching, but there's no reason you can't do it. It's not something that's impossible.
Thank you. Very interesting.
I just add that SWIFT is going to go through a major renewal. I mean, we're going to move beyond not only MT messages, but we're going to move beyond FIN. So we're not going to have 103s and MT202s. We're going to have different transaction types. SWIFT is going to be much more of like an API hub. That's how we're going to be connecting to it in the future. And when that renewal's taking place, there's going to be a whole bunch of utilities that SWIFT put in place in order to take burdens away from the community, because we as individual banks, we have enough issues adapting our back offices from these batch processes to become real-time 24/7 without having to replicate everything on an individual bank basis. So when this transition goes forward, which we can see, SWIFT, FIN is long in the tooth, MT messages are long in the tooth. That transition is upon us, and we're going to build a lot of utilities at SWIFT, which will help the community, including but not limited to this filtering utility.
Yeah, I have a question for Nicholas specifically. As you said, about at least 80% of the transactions do go through multiple correspondent banking. And RFI is a sticking point, and more often than not, they keep asking the same question to one another down the stream. And you did mention that the ISO 20022 would possibly solve this because it has an opportunity to provide more information, richer information. Can you elaborate a little more on this, please?
I'm not sure I see exactly can I elaborate on the question? Because there's many angles to that question.
No, the simple question is that, if information is provided upfront on a transaction, it will result in, reduction in RFIs because that information is already available. And you mentioned that ISO 20022 would possibly provide that opportunity to customers to mention more information upfront. So can you elaborate a little more on that?
Yeah, so I mean, a lot of the problem today when you issue a payment is that the responsibility for the beneficiary information lies with the initiating party, and that information needs to be captured. They capture that through third-party channels, typically, whatever, email instructions or this type of thing. So the information about the beneficiary is relatively poorly structured in most payments. And the FIN format already has some limitations in terms of what it can do. So with the ISO 20022, potentially you have a richer and more structured data format, which would lead to reduction in false positive if banks adapt their screening technology. If you screen the name against the name and your address against the address and the country against the country, as opposed to screening everything against everything. And of course, you end up with the typical, Cuba Street or Tehran is not the country or the city. So that's a clear opportunity for improvement. But of course, that opportunity cascades down the chain, because if you have information which is more structured at source, and the request to pay would be one clear way of making that happen, that information flows through every bank, and every bank should benefit from the same technology improvement. Now, in a utility model, if you can start screening only once, as opposed to screening multiple times, then clearly you can get miles better in terms of supporting that need for efficiency.
So ISO 20022 does have the opportunity to provide more information on remitter and on beneficiary, not just name and address, but specific details like national ID, passport, blah, blah, blah.
I mean, there's a whole data dictionary. Now, of course, it depends what the banks are doing with it, and if they do indeed adapt their back office systems to channel more information. Now, it doesn't mean that passport ID and nationality will be required in a payment. That's not what the FATF recommendations is. But clearly, already having perfectly structured address details within a bank or within a party would be immensely useful. Now, there's more IDs that indeed are possible. No? So.
Very quickly, just one more question, and then we have to wrap up. Do we have a mic? Yeah.
Thanks. I've already posed the question in the app, but it's a good point, because what we did in Switzerland, we already have ISO 20022. Yep. So I'm from IT, so I proposed to match just name and street and town, blah, 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 with the corresponding field in the list. So what happened? My compliance department told me, well, we can't be sure that these fields are filled correctly. So you have to check everything against everything again. So the whole benefit of the ISO 20022 has gone within a second. So could you please give me some advice how I can convince my compliance department that they trust you, and I can do it on the easy way?
Give me their phone number. I'll give them a call.
Thanks. See you later. I'll give it to you.
Okay, well, you can chat after the session on that one. Okay, so to wrap up then, if there's one thing that you want people to think about when they walk away from this session, what will it be, Tony?
Everything which is batch in your back office is going to have to change.
Okay. Matt?
In 3 years' time in Amsterdam, I want everybody in this room to come to the presentation where the four of us are on stage telling you about the launch of our payment screening utility.
And Nicola?
Yeah, I think for me, Matt said it before. I think we're reinventing the payment. It's about time we reinvent screening. That process has not changed for 20 years. It needs a shake-up.
Great. So thanks very much for your time. I hope that was useful and interesting. Feel free to have a chat with us afterwards. We'll be here. And enjoy the rest of Cybus.